Hello and welcome to BloombergQuint. You're watching the fine print. The suspense over some of the key aspects of the goods and services tax regime has ended. The GST Council concluded its two-day meet in the capital today. The Council announced 20 lakh as the threshold limit. For northeastern and hilly states, the threshold is 10 lakhs. This means that any trader whose annual turnover is below these thresholds is exempt from the GST regime. On the matter of dual control, the Council has decided that the state authorities will have jurisdiction where annual turnover is less than 1.5 crore. Anything above 1.5 crore will be assessed either by the state or the centre. Existing 11 lakh service tax assessees will continue to remain under the centre. Any new assessees that get added will be divided between the centre and states. All cesses, for instance, Krishi Kalyan cess, Swachh Bharat cess, Infrastructure cess, R&D cess will be subsumed under GST. To talk about what all of this means for industry and the government, I have with me Badrinarayanan, partner at Lakshmikumaran and Sridharan. Badri, welcome to the fine print. You know, the Confederation of All India Traders has hailed this exemption limit of 20 lakh, and it really sounds like a win-win because for the small traders it means low compliance cost, and for the government it means low cost of administration. Would you agree?
I think that's very good. I think optically they've got a very good balance in going for 20 and 10. 20 lakhs for India and 10 lakhs for Northeast and certain states. It's been something which the trader community has been asking, because the compliance cost of having to comply in a regime like this versus the administration of this can be quite high, especially for small assessees. And GST should not be something which suffocates them with all the IT and all the other requirements which are there already with GST. If
the limit is now 20 lakhs, how much of the revenue is the government losing out really?
So not really too much. So if you see, for example, between 0 to 10 lakhs, if you take the total number of assessees, they almost constitute about 70% of India in terms of the income tax data which has been there. But they only constitute about 0.4 to 0.8% of the turnover contributing companies and assessees. Which means it's a very small number. So even though you've taken out a lot of people, because a large percentage of the people fall in this bracket, and therefore administrative cost comes down. In terms of loss of tax base is almost minimal. It's only about 0.8% to 0.9%, which can be made up with probably a small basis point when it comes to the rate of tax. So I think very, very good for everybody. It keeps the system clean and neat. It focuses on the assessees who are really going to contribute taxes and takes out of the equation people who are not going to benefit from increased compliance and the department having to go after people who are very small.
Right. As far as this threshold limit goes, Badri, there is one aspect that still needs clarity, and that is the composition levy. So basically traders with annual turnover between 20 lakh and 50 lakh. We still don't have any word from the council on it, but what sort of announcement do you expect on this front?
So we do expect at some point of time that that will be clarified. So it's a very interesting thing. So just to kind of explain to everyone what this composition levy is. A composition levy is kind of a direct tax in the form of a GST. What that really means is that if you are 50 lakhs or lower, you can choose to be a composition levy assessee, which means you don't have to have books of records. You do not need to take any issues relating to taking credit, but you pay as a fixed percentage of your revenue, 1% or 2%, which roughly translates to the value addition that you're going to do with respect to this. There were some studies which found that anybody who's less than 50 lakhs has got a relatively high cost of compliance. Almost 3.5% of his revenue goes into compliance. But if you go above 50 lakhs, the rate of increase of compliance cost does not have the same rate, and therefore it's much easier to comply. So a composition levy below 50 lakhs is a nice thing for people to be able to bridge the gap between 20 and 50 or whatever number that they're going to fix at, which will give revenue to the government, but at the same time keep compliance cost low.
Let's get to the issue of dual control.
Sure.
Anything less than 1.5 crore, the state gets to assess that assessee. Anything more than that, Mr. Jaitley announced that it will be divided between the center and the state. While it's a relief for industry, I believe that you get to deal with only one set of officers, tax officer. But how will this division work really?
So it's a interesting division because at some level it probably dilutes the entire GST concept of being a dual GST and both the center and the state jointly administering thing. But like I said, below 1.5 lakhs, the compliance cost is going to be fairly, below 1.5 crores, the compliance cost is going to be fairly high. And therefore, instead of having to deal with two departments, if they only have to deal with the state department, it's probably an easier thing. And also you find the state department has got more men on the streets. So less than 1.5 crores are going to be assessees who are going to be your normal shopkeepers and so on and so forth. So they will really be only having to deal, just like they are today, with the sales tax department, which will be the SGST department in the future. And that's going to be a very, very good thing. Beyond 1.5 crores, like if you take the goods and the manufacturing divisions, they're anyway dealing with both the sales tax people and the excise people. Okay. So they don't have really a problem of having to deal with two departments. That seems to be the thought process, having beyond 1.5 crores being assessed by both. And today the center, the service tax assessees only deal with the center. And that's the reason why they want to keep that intact,
right,
and keeping that. So that's a interesting and it's a very good way of administering, because you don't want small transactions to be administered by too many people.
Right.
And the bigger people who can manage it in the current regime will have processes and things in place to handle that.
Okay, all right. You mentioned the service tax, and let's come to that, because another important announcement that came out from the meet today, that the existing 11 lakh service tax assessees will continue to be assessed by the center. Any new additions will get again divided between the center and the state. I want to understand again, how will that division work, and what happens to mixed profile businesses?
Just to kind of go back, so service tax assessees only deal with the center today, right, and they want to kind of retain the status quo, so to say. And therefore they are saying that we are going to have the service tax assessees who are currently migrating to the GST regime be administered the same way. On mixed use, they are companies which are mainly into goods as also services, and they are anyway dealing with both the center and the state, because at some level they are having goods, and I do believe that they will probably be dually administered by both the center and the state, because there is no reason for them only to deal with the center. Okay. And that's going to be that's really the kind of status quo kind of proposal this is.
Right.
And then the new assessees who are going to come, and there's a big question mark on that, because if you don't have a central registration, even the service tax assessees will have to take few new registrations in the states that they're going to now operate in.
Right.
Whether that will be treated as a new registration, or will it be treated as the same assessee is going to be a big question mark. Right. But keeping that issue for a minute aside, what I do believe is that there will be some sort of a kind of an agreement between the state and the center, saying that if it is somebody who's likely to be goods oriented or somebody who's more services oriented, they'll divide it between the center and the state. Or if there's a new service person, and they want actually over a period of time the states also to get used to the service tax assessees, because they're going to do so.
I think the idea or the rationale behind continuing the central's jurisdiction over it was that the states probably are not geared enough or ready enough to exercise this tax. Sure. In the process of this division, do you see any sort of hurdles that the industry might face?
No, actually it will be quite good according to me, because any service tax industry which is only having to deal initially with one department which they are comfortable with, they are likely to get more compliance and they are likely to bring in much more uniformity in the practices they have had, because the service tax regime has become fairly complicated over the last 20 years, and expecting the states to be able to come up to speed at that level and then be able to assess them may be difficult. But at the same time, over a period of time, I do believe the state should also be administering this. So it's like you said, it's a process which they want to do. I think it's a welcome change for the service tax assessees, because there's been a lot said about the fact that it's such a complicated area, and they would like to have continuity. And service does contribute to a large proportion of our economy. So you do want to protect them and ensure that the transition for them is smooth.
Okay, understood. Another important decision was subsuming all the cesses under the GST regime, and I understand from what I hear from experts that it is good news. But how will this impact the revenue of the center? Because as of today, if I understand correctly, this revenue is not really shared with the states, right?
So one of the great things about cess, as per the center, is cess's revenue need not be shared with the states. It goes to the kitty of the center, and center only uses it. Okay. By subsuming these levies into GST, it's very good, because these cesses have always been a problematic thing from a business perspective, because you have to comply with them. Sometimes you don't get credit of it. Middle of the year they come up, and the rates are also small, and then you need to make whole set of changes to your IT environment to be able to do that, especially for big companies. So from a business point of view, it's very good that these are getting subsumed. But from a government point of view, obviously, it's revenue which they are going to give up to the states. But I don't believe it is that big a problem.
Will they be compensated or accounted for in some fashion?
So the way it, I think, will work is that today states are all demanding compensation for the
Loss
taxes that they are going to lose.
Yeah.
And by putting this cess as part of the states, so effectively that money is going to go back to the states. So it's going to reduce actually the compensation that the center ultimately has to pay. So obviously center must have done some analysis to say, this is the amount of money that I want to pay to the states. Either I can pay it by retaining all the cesses and having it difficult for the business, or subsuming these cesses and then kind of going ahead and have that distributed directly to the states. So according to me, they must have done the numbers. And I think from a business point of view, it's extremely good to not have these cesses. And really, it's one tax at least when you're starting out.
Right. Badri, there's one issue of a GST notification confusion, as we call it, that has gotten buried and clouded from all the euphoria around the announcements by the GST Council, and that is the September 16 notification that gives effect to a Section 17, which essentially, by one interpretation, takes away the centre's ability to levy excise tax. We haven't heard anything from the government as yet, but the Revenue Secretary tweeted saying that, there's no legal infirmity in the notification. Are you telling any of your clients to test the waters of the government's ability at this stage to be able to levy excise or not?
That will be quite irresponsible for me to tell my clients to try a legal googly just for the academic satisfaction of a legal practitioner. So this is a notification which basically amended entry 84 of the union list to exclude excise duty on certain commodities. As of now, whatever taxes are not paid or not put forward in the union list and the state list can be taxed by the center under the entry 97. And therefore, from an academic point of view, though there is no specific levy for excise duty, it's probably come to the entry 97 from where you're probably going to have power. And of course, there are some legal practitioners who doubt whether once you remove a specific entry and you replace with the residual entry, whether you can tax it. But this is an academic discussion at this point of time. And I don't believe any court is going to uphold this and say that no excise duty should be levied from this date. If they do it, it'll be something very interesting and very good, but likely to have retrospective amendments and validation and so on and so forth. So at least I have not got anybody who's come to me and said we want to challenge the excise duty which I am paying. But I will not be surprised if somebody in some state does it and we get to hear about it. But yeah, it was a bit of a vulnerable, I would say, attempt to bring in this GST law quickly. I think they should have spent some more time in bringing out, giving effect to these provisions, because you can have wide ramification and these are things that you cannot back off once an amendment has happened. So that's really it is.
We'll watch out for the announcement on this notification, if at all. But one last comment on what you've heard in the last 2 days from the council outcomes.
So GST Council, as you know today, has met, and then it's come at a time when I think they're progressing very well and the states and the centre are together. Of course, there were certain murmurs that whether the BJP ruled states along with the centre being majority, whether they are able to push much more of the structural changes which is there. All this is part and parcel of the entire GST Council's working. It's always difficult when you are going to have a new system where you'll have to share the burden. But I think they are moving in the right direction, and I think it's at least the businesses are going to be quite good, and whatever is coming out is constructive. So I think it's moving in the right direction for me.
It has speed, it is efficient, and it's constructive. With that, we're going to wrap this week's fine print. For the next 2 meetings, the GST Council agenda will be draft rules on exemptions, GST tax rate and tax slab. We promise to decode all of that for you right here on BloombergQuint.